Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra, and here on the show we are going to be discussing everything about markets, the benchmark index moves, the sectoral action and all the stocks that are buzzing in trade. We'll also get you expert views on Reliance Industries, especially after the news came out last evening on how Jio Financial Services is now tying up with BlackRock and entering the asset management industry in India. How does it really, impact the entire industry at large? What does it mean for Reliance Industries shareholders? That will be our focus, and we'll get you expert views on that. But first up, a quick check on how the markets are doing at this point in time. We did have a positive start in the markets today, but you're looking at some softness building up as we inch closer to the series F&O expiry. So 19,735 currently on the Nifty, 41 points down in trade. The Sensex is down by 190 odd points at 66,514. So 0.3% lower for this one. Let's look at the broader markets. If there is any similar action right there, the broader markets are in fact doing much better. The mid cap 100 index up half odd percent. The small cap 100 index up by 0.3% in the trade right now. Now, when we talk about the other sectoral indices right now, right from the morning trade, we were seeing a whole lot of buzzing action in the pharma, healthcare pack, also in the metal pack as well. All of them were flying away. You can see the Nifty bank is dragging about half odd percent lower, which is why the heavyweight counter is not really participating. But it's the pharma index that's the limelight today. 3.5% uptick for this one as well. In tandem, the healthcare index is also higher by 3 odd percent. Apart from this, you're looking at strong moves coming in on, the metal pack is in fact softened a little bit from the day's high point. PSU banks are supporting the move today, almost 1% higher. The realty index is higher by 1.6%. So these are the pockets that are buzzing the most. Autos have slipped to the lowest point of the day, 1% down for this one. Private banks not participating, and thereby you can see the decline on the Nifty bank today. On the stock specific news, as far as the Nifty gainers on the index are concerned today, you can clearly see a whole host of pharma names: Cipla, Sun Pharma, Divis Laboratories, Dr. Reddy's, Apollo Hospitals. All 5 names of the top 5 Nifty gainers belong to pharma and healthcare business. Very strong move after the earnings on Cipla, almost 9.5% up in trade, 3% higher for Sun Pharma at 1145. Very strong moves coming in. On the downside, you have M&M that's down in trade after the acquisition of some stake in RBL Bank. Britannia, Nestle, Tata Consumer, the FMCG majors that are seeing some slippage today. And Tech Mahindra down after weak earnings as well. But let's welcome our guest on the show. Mr. G. Chokkalingam joins in. He's the founder and MD at Equinomics Research. Welcome, sir, and thank you so much for taking the time out to discuss markets and insights from there on Business Today TV. First up, the question is on the market specifically. We did have 2 or 3 days of consolidation. The markets bounced back again. But your thoughts on how are you looking at the entire trading setup, and what is the best way to approach the markets as we've been revisiting record highs days after days? What is the best way to approach investments in markets?
Yes, we have been a little nervous on the whole market for the last 1 month because it has hit the overall market cap has breached 300 lakh crore, which is significantly above GDP of current prices of FY23, and even it is going to be little more than FY24 expected GDP in nominal term. Of course, this ratio as per se doesn't give fear, but what gives me fear is the disproportionate relationship between the market cap and the liquidity. What I mean to say is that even if 1% or even 0.5% of this market cap come for selling due to any unexpected news development, adverse news development, we don't have appetite. Just a 0.5% also would mean the market would demand 1.5 lakh crore of crore rupees of liquidity, hard liquidity, which is very difficult to find out even a period of 1 to 2 months. So this is a perennial issue whenever the market hits a peak, and also the valuation is slightly above the trailing PE of last 5 years. So therefore, I would advise cautious approach to the retail investors, particularly because the small cap index has multiplied manyfold from the bottom in 2020. And if you look back the history also in the last 15 years, every time when the small cap index has hit the record high and market cap as a whole jumped manyfold, there was a severe correction, and it was quite serious in nature. This happened invariably once in 3 or 4 years roughly. And also the valuation bubble is there in many small caps. So considering this, I would believe that the market overall can correct 3 to 5%, and overpriced small cap can correct even 5 to 20%. So therefore, the retail investors should be cautious. Our research strategy is to put 5 to 10% in cash, 5% in gold ETF, and 30 to 50% in the index stocks or top 100 stocks, or worst case top 250 stocks. So this should be the approach, and they should exit the small caps which are having a bubble valuation. Better to be very, very cautious because of still a considerable number of regions have a deficit rainfall. Some regions have a flooding. So both could affect the prices of vegetables and fruits and agri output as well. So therefore, this is a research strategy for the equity asset class I would present to the retail investors.
Okay, so how should one be picking stocks right now? What kind of stocks should form one's portfolio? We've seen sectoral rotation happen for the first half of the calendar year already. Many stocks have already reached their 52-week high levels. Many are also up a portfolio. What kind of stocks should one include? We're seeing all the pharma names fly away in trade today. Metals have been shining for the last 2 or 3 trading sessions. Is there any pocket where you find attractiveness, and how can one pick stocks right here?
Yes. Although I am a little nervous on the short term, I am extremely bullish on medium to long term. All of us know the story. I don't want to repeat. The fastest growth to, the fastest record level of GDP. All that augur well. The immediate risk factor will be in November, December state election, and then May general election. Beyond that, the market is going to be extremely good. Whoever comes to power, because foreign investors give a lot of importance to democracy. But it doesn't come, there will be some knee-jerk reaction on downside. But otherwise, long-term outlook looks very good. So therefore, one should not exit the market completely. To answer your specific question, within the large cap, one should look at the telecom players like Reliance and Airtel, and then one should also have a good exposure to the banking stocks because among all the sectors which are listed in Nifty and Sensex, if you see decomposed, the banking sector is the only sector to see the reversal of interest rate cycle. So this is the second sector. So large banking stocks. So my most preferred stock is HDFC Bank, and followed by Maharashtra Bank. And then third, there are many small and mid-cap stocks with great deep value. And wherever you get valuation comfort, you should invest, and you should stay invested in pharma names, big names, if you have already invested. In the small cap, one can look at Indigo Remedy. I am extremely bullish. The way Unicom played out, JB Chemical played out in the last 5 years. This is my third pick after I identified those two names. But of course, it cannot give a kind of return JB Chemical gave, to be very fair. But certainly, it will create a very good alpha. So this should be the broad strategy the investor should follow.
Okay. Mr. Chokkalingam, since you talked about Reliance briefly, and from the telecom perspective, I want to broaden the horizon since it's the biggest conglomerate, and now we've been seeing a whole host of announcements with respect to corporate action on Reliance Industries. Just yesterday, we saw Reliance Industries talking about how Jio Financial Services has now announced a JV with BlackRock for an entry in the asset management industry. Both of Jio Financial Services and BlackRock are to form a $300 million JV to offer investment solutions in India. Now, they have particularly said in their press release that the partnership aims to transform India's asset management industry through a digital-first offering and democratize access to investment solutions for investors in India. First up, how do you view this development just from Reliance Industries' perspective?
Certainly. I already covered on the Reliance Industry. I am extremely bullish on Reliance Industry. In fact, in my research report, I have been communicating to our people that Reliance Industry is the best stock in Sensex and Nifty. I may be wrong, but that's my conviction. I personally don't own any shares in Reliance. This conviction comes from the fact that one, he has been reducing the share of oil and gas, which has government intervention. That business share is going down, whereas the consumer-oriented business share in the total revenue profit is consistently going up. And second, they have a credible track record of successfully building new business like mobile and mobile telecom and retail. I am 100% confident that they would repeat such successful experience as well as in financial services, and green energy, etc. And they are also getting into FMCG. So there also they would create a size step by step. And third, the unlocking potential. We saw the way the Jio Financial Services value. Now, this particular development also, the deal with the BlackRock, is going to be a phenomenal. In fact, not only for Reliance Industry, JFS shareholders, even for the common investors, because it is going to give tough competition to the existing players. It is going to create a disruption, but this disruption will not be similar to mobile telecom, because mobile telecom it is not a knowledge driven business, whereas asset management is knowledge driven business. So it is not easy to create that kind of disruption, but still it can create some impact, because you are joining a global leader, about $10 trillion of assets and global experience. And here the Reliance has a platform of Jio Mobile, retail telecom. So it is estimated that it has got even 100 crore, people access. So therefore, to some extent, it will have a disruption, and it is good for the investors because the competition will increase. Even the small player can survive if they can compete in terms of performance with a giant like Reliance. And it is good for the economy also. It will create a new set of investors coming to the economy. Already we are seeing every week 6 to 7 lakh new investors coming to the market in the last 2 years. Now that now investor base is close to now 14 crore. I am sure with the BlackRock Reliance joint venture, this is going to become soon 20 crore in a couple of years. And for the company also to do well, because we believe BlackRock has the excellent technology platform for asset management. Who knows, it can bring even the global fund to invest in India through this asset management company. That is my visionary statement, because India is going to be a fantastic growth story for the long term. So it has got a multiple benefits, and the Jio Finance can even build wealth management and so many other businesses. And I mean, it is too early, too optimistic, but then still I would give my visionary statement that in the next 3 to 5 years, Jio Financial itself can give birth to many more companies in terms of the wealth management or discount brokerage, and that is another area Jio Finance can do big impact. And it's going to be a problem for the existing players in the discounting brokerage, because Jio has got a mobile telecom, and that platform is a suitable platform for promoting the discount brokerage. So, and also the Reliance coming back to the core business, since now JFS is divested. And today we saw the retail business, the kind of media speculation is going on, and they're talking about $100 billion valuation for retail business, and that itself will be about 48% of the current market cap. Even if you net out the valuation for other minority holders, at least 40% of the current market cap can come from the retail venture itself. So therefore, I continue to believe that Reliance is going to become a mini economy in the next 5 to 10 years, and it is the safest large cap index stocks for the Indian investor community, because in 5 to 10 years, the oil and gas share can come down to even 10%. Once upon a time, it used to be 100%. So in the process, the valuation multiple also will increase substantially. So therefore, I consider, I may be wrong, purely as a student of economics, I consider Reliance is the best Sensex and Nifty stock to invest for next 3 to 5 years.
Fair enough. So at 25.18, what is the upside potential that you would see for long term, since you believe that it is emerging as a mini economy, has a lot of growth potential that investors can really tap onto right now?
Yeah, minimum 5,000 rupees, 3 to 5 years. That's what I positioned. So on that, you have to deduct the discount price of JFS, which is 261, 260. So so definitely at around 4,700 rupees, anywhere in 3 to 5 years. But why I'm giving that wide range is that, off late the market gives more room for perception rather than the EPS. What I mean, overnight the PE of any company can change dramatically, and that can also create a value apart from build up in the bottom line, that is EPS. That's what we saw in e-commerce companies. Even e-commerce company making a 85 crore loss was valued at 5,000 crore 1 year back. So for a credible business like Reliance, when the share of oil and gas comes down as low as 15-20% in the 4 year time frame, anything can happen into wealth creation on upside based on the re-rating of its PE multiple. So I am hoping on that as well, and plus the unlocking potential from the retail and the Jio Mobile. So therefore, 3 to 5 years, most probably in 4 years, it should hit about 4,700 rupees.
Okay. How are you viewing the other asset management companies that are listed in this business, broking houses, since you're saying that could be the next foray for the company? How are you looking at the listed space and how is that going to get impacted with this?
Broking companies would be the worst affected, but of course, to be very fair, it is too early. They have not mentioned anything about the getting into broking, but
Sure.
obviously it makes a lot of sense, common sense. So they will be affected because it's a commodity business. There is no role for knowledge. So that will be the worst affected existing players, followed by asset management company, particularly in the debt product and all. I'm not saying they have better knowledge than equity people like us, but then because returns are more or less same across the board for most, the Reliance can make a disruption in the debt segment. But in equity segment, the size matters only to some extent, but to a large extent, the performance matters.
Yeah.
So all these companies will be under tremendous pressure, existing companies. If they have to survive, or even they have to beat Reliance Jio's asset management company, they have to focus on the performance consistently. They have to improve. Otherwise, it's going to be very tough after the entry of such a big name. So therefore, it is little early to say whether the existing player will be wiped out. They will be wiped out not because of purely entry of Jio, but because of the competition Jio would add in terms of performance. That is going to matter. So net to net, anyhow, it is slightly negative for all the existing players. In fact, if
Understood.
I looked at the network, only the HDFC Mutual Fund has a very big network than what Jio has, proposed through joint venture. But other companies are all having similar networks, to what Jio has planned now through this joint venture. Of course, network makes a little sense in the knowledge-driven business, but still, to create advertising and to acquire talented people in the industry, it matters. So therefore, it's going to be a little tough for existing players. One has to wait and watch and look at the performance. Even smallest player can survive and beat even Reliance in terms of growth, provided they have the performance. So that is going to be more critical now. It was a critical issue. It becomes more critical now. So one has to wait and watch.
One has to wait and watch, but clearly some disruption coming in the way of asset management companies and then later on perhaps in the broking space as well. We'll continue to watch out for how this space really develops, but Reliance Industries is a promising stock, as Mr. Chokkalingam does say at this point in time, the safest stock according to him in the Sensex and the Nifty right now for investors who have a very long-term horizon. He does believe 5,000 rupees or the kind of target over the next 3 to 5 years is something that he's betting big on. Many thanks, Mr. Chokkalingam, for being with us on the show and discussing all these insights on these developments with respect to Reliance and overall on the markets as well. Always a pleasure having you with us on Business Today TV. Let's now get back to the markets and see how they are performing. So 200-point cut now on the Sensex at 66,500. The Nifty is hovering 44 points lower in trade at 19,734. We'll continue to watch out for as to how the expiry really looks in the second half of trading action. But volatility is setting in right before the close of this session for sure. So we'll continue to track the market movement for you. You can be with us on Business Today TV to track all the market movement. And don't forget to subscribe to this channel and continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in.